Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique, tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this live core conversation brought to you by Red Cloud Financial Services. I'm your host, Mark Bunting. I'm the host of RCTV here at Red Cloud. Thank you very much for joining us. If you have some questions for our guest, you can put them in the chat bot on the side there, and we'll get to as many as we can toward the end of the show. We see people joining in already from Victoria, BC, from Shenandoah Valley in Virginia as well. Now, before we get to our guest, I wanted to let you know that we have a live copper showcase coming next Wednesday. That'll be at 1 p.m. Eastern time. We'll feature executives from 6 different copper companies. We have a nice mix of producers, developers, and explorers as well. So you want to tune in for that. Right now, let's get to our guest. We are featuring Lobo Tiggre. He is the CEO and publisher of The Independent Speculator. Lobo, great to see you again.
Happy to be on the show.
Now, for those who don't know, Lobo was a featured keynote speaker at the Red Cloud Conference about, let's call it 5 weeks ago. And we had a great conversation. Lobo was very informative, and we're going to pick up on some of those points and take it further. And you'll find out more about his investing process, his discipline, his due diligence, and many other factors. So, Lobo, the giant elephant in the room, of course, is what's been happening in financial markets in the last week or so. And I just want to go back to April 2nd, I guess it was, when President Trump was in the Rose Garden introducing all of those tariffs. And then we've seen the market reaction since then. And of course, he's put a lot of those on pause with the 10% baseline for a lot of countries, ex-China. But I'm just wondering, April 2nd, and the reaction we saw in the markets, do you think that investors in a general sense just really underestimated the intentions of President Trump and his team, and they were caught offside? They were just incorrectly positioned. Would you agree with that?
No, I think investors were very right to worry about Trump and his intentions. I'm not sure, sorry, MAGA Maxis, but I'm not sure that Trump was all that sure on what his intentions were. He if you listen to him for years, there's a general direction of his thought, but the particular things he says are rarely entirely consistent. It's sort of like an average, moves in a certain direction of what he wants to do. And, he throws up trial balloons to see what happens, spaghetti at the wall, as they say, see what sticks. I don't know that he knew what would happen. I think he would give it a try. There's a lot of people saying, I'm not a bond market vigilante, but there's a lot of people saying that the market turmoil didn't surprise them too much. But when the bond market balked, that was what made Trump do his about face recently. I mean, he could have been looking at a truss moment, if you understand what I'm saying, had he not backed off. And now, to listen to Scott Bessent, this was the strategy all along. This was all about singling out China to show the world that it was a bad actor and everybody else can harmonize and be happy now. I just find that incredibly hard to believe. No, I don't want to mince words. I do not believe that. I think that's made up post fact. They're putting a positive face on it. And we'll see. That said, if what I'm saying is right, he had a general idea. It's actually par for the course for the idea to cause more turmoil than expected and to adjust the idea.
And by a trust moment, of course, you're talking about the former prime minister in Britain who was in that position for a very short period of time. And of course, she initiated all sorts of turmoil in the market when she brought down that budget that just didn't work in the market.
Right. It wasn't the people, it wasn't, the backbenchers, it wasn't the lords, it was the bond market that just said no mas.
Right, and Trump yesterday pointed to the bond market with those yields, and I'm just looking today. U.S. Treasury yields continue to move higher. But when I talk about being prepared, I'm thinking of hedge risk management, which prior to April 2nd had been saying, and this is the research firm, in case viewers aren't familiar, but they had been saying that they were naming 3 E's. These tariffs would be explicit, extensive, and they will be enforced. And they were advising their clients to be positioned a certain way defensively. And had you followed that, you would have avoided all the damage, especially on the equity side. But that's sort of another story. And let's get to your process. And we've talked before about how you have a very disciplined process. You want to be unemotional. You're just essentially looking at the data. You're data driven. So during this period, the last, let's call it a week or so, 10 days, has that served you well and your readers as well?
Yes, but when you say I'm data driven, I have to push back a little because I don't want to come across like Jerome Powell. That doesn't mean that I'm data dependent in the way that mainstream economic analysts, Wall Street firms with their models, and the Fed are. I think, obviously you can't ignore data, but what data dependent has come to mean is we don't know what's going to happen. We have no plan. We're just going to respond at the moment, given the latest data point. And this is not just a theoretical objection here. The insane swing that we saw in the market yesterday, I mean, the NASDAQ up 10%, right? The Dow 2,500 up almost at one point, as I recall, right? That's not the sort of thing that the average investor thinking about the fundamentals calls a stockbroker and says, yeah, I want to pay all this extra money for this stuff. No, this is what happens when data dependent people enter some new data point in their model. And in this case, there was so much baked in or modeled in on these tariff numbers that this huge change produced, these massive buying orders, and the computers went and tripped over each other trying to chase these things higher. So it's funny that in a way that you could say the computers are being emotional. Of course it's not. It's the humans behind the computers and their assumptions. But if, like any tool, if computers magnify human effort, right? A hammer magnifies what you can do with your hand. A trading computer magnifies, your impact in the market. It's not surprising at all to see the, almost literal insanity that we saw yesterday, and not at all surprising to see it reverse today as cooler heads prevail. So to your point, yes, from Howard Marks to Warren Buffett to their predecessors, people talk about how, emotions are great, but they're not great investment tools, and that you have to have some self-discipline there. To your specific point about, me being data dependent, that's about the companies. That's about due diligence. That's about going out, kicking rocks in the field to see if they actually turn up the sparkly stuff you're looking for. And or now that I have a team, sending my guys out to do that for me.
Now, again, a process question. This is a time, of course, when certain types of investors, maybe with a lack of education or they're impulsive, whatever it may be, they can get whipped around, especially when they're reacting to mainstream media headlines and clickbait and so on. So is part of your process just letting the market unfold and then you can make your decisions and the market sort of dictates what it is you want to do as opposed to you wanting the market to do what you want it to do?
Well, sure. Of course, wanting the market to do what you want, when you want it, and all that, that's obviously a recipe for failure. I should say, in all fairness, I'm not a day trader. I'm a buy and hold sort of person, not forever. But, I'll buy a particular company. They're building a mine or they have a discovery program that seems to be going well. And there's a specific thesis, right? They're going to build the mine or they're going to define a large copper deposit or whatever it is. And they succeed or they fail. And so, I wait for that. In that context, price fluctuations don't really matter. If the stock is down 50%, but it's because of wild market fluctuations and the company is actually delivering on the ground, they're building the mine, or every drill hole makes that copper deposit larger, or whatever it is, right? If the value is actually increasing in reality, but the stock is on sale, that's actually a reason to buy, not to sell. So yes, my method is to take a step back as a fundamentalist, look what's going on in the real world. That said, I know that there's people out there who are day traders, TAs who are, asset agnostic. They're playing the volatility market. That's not my method. Some people are apparently successful at that. So I'm not saying that nobody should ever pay any attention to those things. I'm saying that this may sound a little bit crazy, but I think of myself as a value speculator. One of my mentors, the person who got me started in this business was, the great speculator, Doug Casey. But I'm very partial to what Warren Buffett says and his very conservative, cautious approach of owning a business and being a value investor, a la Graham. And so it may seem like an odd thing to mix the angel and the demon over my shoulder, right? But I think of myself as a value speculator. So in that regard, yes, being able to take a step back, take a deep breath, roll with the punches, don't panic, make decisions according to actual value, one way or the other. That has worked well for me and for my readers.
Now, we've talked before, Lobo, about your due diligence. Your handle on X is a due diligence guy. So to that point, you look at all kinds of different factors. One of them includes insider buying and selling. Have you seen, or did you see any pickup in insider selling leading up to all this turbulence?
No, in my space, actually, it's the other way around. I think, I don't watch insider trading as a broad market indicator. I watch it again as a company specific indicator. If I talk to the CEO and they're telling me how great it is, but he's selling on the market, that's not very encouraging. If I see multiple insiders, not just executing options, and this can be complicated. We probably don't want to go too far down that rabbit hole, but I should say very quickly that just because you see a red blip or a sell on the insider trading reports, that's not necessarily management bailing on the story. If you look at the same time, you might see a green and a red at the same time where they exercise some options, right? And there was some buying and selling simultaneously. And sometimes, this is part of their compensation. They've got a kid to put through college or something like that. So we don't want to leap to any conclusions here. But clearly, if there's a pattern of management buying on the open market, not just incentive options or something like that, but buying on the open market, that's very encouraging. They're putting their money where their mouth is. And I do believe that skin in the game is very important. And I do look at that. Every company that I consider buying or that we cover under my take, which is like almost 1,000 companies now, my team and I, that's one of those mandatory things on the checklist is to look at insider buying or selling.
Now, you've told us lobo in Spanish means wolf, and you've said sometimes there are occurrences when your wolf whiskers are twitching for whatever reason. Are they twitching lately, and if so, why?
Yes. Well, so it comes and it goes. Like yesterday, when the markets were going manic, my wolf whiskers could have lifted me off the ground. They were vibrating. Like it was just so crazy. It was so obvious that there would be a reversal. Dangerous words to say that something is obvious or that it will happen. But broader, what are my wolf whiskers telling me right now? I guess the short way of putting it would be, a pause in the tariffs or even a reversal. If this is Trump putting a brave face on calling off the tariff war and going with the lower level and calling it victory because 75 countries have made offers, if that's what it is, those offers still have to be worked out. Market participants still have no idea who those 75 countries are, what their offers are, right? If you're exposed to somebody that moved from China manufacturing to Vietnam, and Vietnam is one that has made an offer, is that investment now safe? Or does Trump come back and say, well, gee, Vietnam, you cutting your tariffs to zero doesn't rectify the trade imbalance? You need to buy, a $250 million of U.S. something, energy something, right, per month, or you're still going to be tariffed, right? We don't know this yet. No market participant knows this yet. And you can see this, it's starting now in earnings season. You can see it with Delta yanking their guidance. Walmart, this is a major economic bellwether. You talk about wolf whiskers twitching. Walmart to yank its guidance and say, we don't know what the heck's going to happen, right? I think we're going to see a lot more of that, even if the trade war stops now, right? What's already been done is going to take a while to work through the system. And that uncertainty, it's not good for the economy. It's not good for certain investment classes. It's great for others, like certain safe haven assets that are up over $100 an ounce today, right? These are the kinds of things that I think people ought to be paying attention to.
Right. We'll get to gold and silver and copper and other metals in just a while. So you look old enough to have been through at least a few crashes, and you referred to that rally yesterday. You probably know that it was the third largest rally ever, going back to 1950 on the S&P 500. The other two were in 2008, and both of those were huge bear market rallies, and the S&P was nowhere near bottoming. So I'm wondering what you've learned from living through and probably making some mistakes and doing a few things right over the years during crashes.
Well, there's several things. One would be, this seems like a no-brainer, but really it takes some learning, is some humility. Like, you're so sure. Like yesterday, I was so sure that the market's response was crazy and it would be reversed. But if I had put some kind of massive bet on that, suppose even I was right, like all things considered, like now we know that was overdone, it was crazy, and the market has reversed. But suppose overnight that Jay Powell and co had gotten spooked and they'd come out with an emergency statement from the Fed that they were going to put in a 75 bp cut to, help shore up the economy during the trade war uncertainty, right? I could have been right in my market analysis and dead wrong in terms of investment outcomes the next day, right? So, humility is a lesson that needs to be learned again and again and again. And in ways, it's harder when you have experience because you've seen something so many times and you just kind of, you feel like what's going to happen. Just 30 seconds. Let me tell you, I rollerblade for exercise. It's easier on my knees than running. And I've been doing it since I was a teenager, right? More years than I care to admit. I'm a pretty good rollerblader. I got home from rollerblading the other day and I got, I don't know, careless, cocky. I thought I knew what I'm doing. I've been rollerblading for 45 years, right? And I miscalculated. I went around a corner too fast and I landed flat on my back. Right? It's a simple example, but like, imagine you do that with serious, like life-altering amounts of money or with client money. So, when I say I'm a speculator, I insist I'm not a wild gambler. I'm a value speculator. I'm a cautious, disciplined, and I hope rational speculator. And humility is something that we all need reminders of from time to time. And I hope that, market volatility like this will help us in that regard.
Any lasting injuries from that fall yesterday?
Well, I also studied some martial arts and I was taught how to fall. And believe it or not, it's been decades again, but I remembered what, I didn't even think about it. I did what sensei said and it, slapped the ground and it broke the fall. I had a couple bruises on my arms, but, I could have hit my head pretty hard. I was actually thinking as I went down, there goes my tailbone. But no, just a couple bruises. They're fine now. So training and experience does matter. So I hope that that's what I'm providing clients through my services.
Just a quick aside, I haven't rollerbladed for a while, but years ago, I was in Winnipeg, beautiful sunny day, Assiniboine Park, doing slow crossovers, and somehow just lost concentration, tripped myself up. I was wearing no equipment, massive cut on my arm, and I still have the scar. So to your point. Now,
let's not go too far down that road, but I'm sure it was the girl in the red dress's fault. And what you said about the equipment is actually to the point of what we're talking about for investors.
Yeah.
I was wearing pads. And had I not been, like the helmet, it's a pain in the butt. But had I not been, I am sure I would have cracked my head good. And these floors are, okay, it's not real marble, but it's just as hard, right?
Right.
So yes, I mean, let's connect this metaphor for the real people out there, right?
Yeah.
Listen to people like Rick Wool, and they say, got a hunch, bet a bunch. It's not a good way to go. When you have big wins, listen to Doug Casey when he says, don't let them slip through your fingers, right? His sell half on a first double formula, I've modified that. I call it the upside maximizer. I let it run and I use a stop to make sure that I don't, have a big win turn into a loss. But these kinds of strategies and disciplines, I think, are important. And, some are available on my website. Ask me if you don't know what I'm talking about. But yes, discipline pays. That's my main motto.
Right. Preserving, protecting, compounding your capital and preserving it first and foremost, for sure. So you've said that pretty well at all times you have a shopping list, and also that volatility can be your friend. So how friendly has this volatility been? And have you acted at all on some of the names on your shopping list, or are you just waiting and watching?
Not yet. In fact, I just pared back my action call right now. The only thing I'm willing to buy is a gold stock if I can find a compelling value proposition that I've overlooked. I'm not saying go out and chase all gold stocks. Certainly not anything at 52-week or multi-year highs. I'm saying that the way that the markets are moving now, if I did find an overlooked gem in that space, I would. But everything else, including silver, copper, uranium, my other favorite metals, I'm not buying anything yet. And to the point of your question, I came out last fall, as I do on a yearly basis as we head into the end of the year, and I try to make my top pick for the next year. And for 2025, it wasn't gold, it wasn't silver, it wasn't uranium, it was copper. And out of the gate this year, copper did really well, and all kinds of people were congratulating me. Hey, Lobo, you sure nailed copper right. We might even have mentioned this at PDAC. But I was telling people, and this comes to your question, I was telling people, yeah, I'm bullish on copper, but that's based on inflation later in the year. I'm not buying anything yet. See, I'm not buying anything yet. And people were telling me, Lobo, you're missing the boat. You're missing the boat. Copper's going. We hit an all-time high in copper not that long ago. And I said, yeah, but not for the reasons that I was speculating on. It's being driven by tariff headlines. This is reversible. And lo and behold, we got a reversal just yesterday. And, copper was already retreating, and we have had copper actually go into an official bear market since that high. So again, discipline plays. To the shopping list question, the reason why I put copper on my shopping list is now starting to come due. I said, look, I'm very bullish on copper, but there's likely to be volatility. I've been calling it Trump shock all year. Trump shock was going to whack copper. I was not, I don't know the future, but I was highly confident of that. And I was looking for that buying opportunity. So I see it happening. Have I pulled the trigger yet? No, but I'm certainly, in Santa mode of checking my list twice, making sure who's been naughty, who's been nice, put something on, take something off. And I do not know when the market will bottom. I'm not going to put out a signal, this is the bottom, buy. I will tell clients and readers, actually, of the broader, my free letter, I'll tell, even in their free letter, I'll tell them, look, I don't know where the bottom is, but either things are cheap enough that I just can't resist. It's close enough, I'm going to buy, or I think it's probably behind us. I don't know when, but it's probably behind us. So in those circumstances, that will be when I'll start executing on my shopping list. That includes uranium and silver as well.
Right. Uranium is my next question. At the Red Cloud conference, you said if there was a big scare in the market, which we've seen now, and I think you even said if it's coming out of the White House, which we've seen, that it could be an opportunity to buy uranium with both hands. But it sounds like your hands are kind of empty at the moment. You haven't acted yet. Is that right?
That is correct. I mean, on both fronts. I mean, and this one is really killing me. The uranium stocks have corrected so much. I think spot is oversold. If high prices cure high prices, that has already happened. Dropping into the mid to low 60s is low enough that it will, or is in some cases, postponing construction decisions, that sort of thing. So, other things being equal, I would actually be buying uranium stocks right now. But the Trump shock's not done. And, rightly or wrongly, actually, I would say wrongly, if you look at the last 4 recessions in the US, uranium has traded slightly upwards during 3 of those 4 recessions. And the one where it traded down, that was 2008, and uranium had already peaked in 2007. So arguably it was down for other reasons. So uranium is for baseload power. It's very recession resistant. When in a recession, you still want your airport lights to work. You still want your hospitals to work. And that's where nuclear power does its best, right? So, we're there now. I'm just like itching to buy uranium, but, markets can remain irrational longer than you can remain solvent, as they say. The Trump shock hasn't stopped. The, energy sector, as we're seeing with oil, gets whacked on economic concerns. And even though uranium over the course of a recession has shown, great strength in the past, that doesn't mean it won't get whacked during the scare. And we're seeing that now. So again, I don't know where the bottom is. If you're not concerned where the bottom is, if you think the stocks have gotten cheap enough now that you don't care if they drop another 30, 40% before they go back up again, if you have the intestinal fortitude to ride that out, who knows? Maybe the bottom's already in. Maybe now is the time to buy. I don't know. I'm not ready to do that. And particularly as, a public figure with, 40,000 best friends looking over my shoulder, I don't want to call that bottom. Certainly not before it looks like it's behind us. But I am raring to go. I talking about wolf whiskers, they're like standing out straight, like lightning bolts, I am keen to buy more uranium. I do not buy all this nonsense about, more efficient AI means no more nuclear, or now the big scare is coal, clean, beautiful coal. That's going to be the end of no. We're going to need the coal. We're going to need the uranium. We're going to need even the wind turbines. We're going to need everything to power the world going forward, with or without, massive electric car adoption.
All right, nice answer. Let's move along to gold. Last time we spoke, you said that it is, what did you say? You said there's a huge bid under it. It's obviously held up very well over this past week or so. I'm just looking at it now, 31.76, which is just shy of an all-time high. So what's your current view on gold and how it's behaving?
Yeah, I have been saying all year that it makes me very nervous with something at an all-time, at least nominally all-time high, to say it's going higher. And if you look at a long-term gold chart, like if you look at it from 1970 to now or something, like that, it's gone vertical. It's like parabolic, right? And it's difficult for, I'm not a cheerleader. I don't have a big red buy button on TV. I'm not here to tell everybody what they want to hear. I'm trying to give you the best thoughts I have to share, as duly and rationally considered as possible. So it's very difficult for me to look at a chart like that and say, yeah, let's all go all in here. But as you said, the market has changed. There is a buy under gold from central banks in the global south, if not deeper pockets around the world, that just wasn't there before. This is a game changer. I see it as a paradigm shift, a one-way door that isn't going away. And certainly the trade war is not helping it go away. If anything, it's just fanning those flames. So in that context, it does make some sense to say, okay, pre-Trump, post-Trump, what works in this environment now? So I don't know where it goes. When I'm not a technical analyst, but when you're above a previous all-time high, there is literally no ceiling. If we adjust the previous all-time highs for CPI, which I think is a conservative case, a real using CPI all-time high for gold would be over 3,500. So if you want to see that as a potential source of resistance, that could be a target. I'm not promising that. What am I saying? I'm saying that the forces clearly driving markets right now are very bullish for safe haven assets, including gold. And the dollar's getting whacked, by the way, too, which is very, very bullish for gold right now. So you have bullish factors in the market for gold now, and you have this paradigm shift that we've been talking about, this change that I think is a one-way door. I mean, no matter what deal Trump and Xi might come up with next week, China's not going to go back to being okay with the way things were before. Europe isn't going to go back to trusting America the way it was before. Even Canada, no matter what deal they make, when you feel betrayed the way at a gut level so many of my Canadian friends feel, that just doesn't go away quickly. I think all of this is very bullish for gold. Famous last words, watch me say this and gold craters tomorrow and corrects. But let's say gold has a terrible rest of the year. It drops 10%, 20%, 20% bear market for gold. That would put you at 2,400, above 2,400. That is a phenomenal price for the actual business of mining the stuff and getting paid for it. And for your projects right now, your development projects, they don't model $2,400 gold, or most of them shouldn't be, right? So there's plenty of room to make money here, regardless. It makes me nervous to say it, but yes, I'm very bullish on gold in the near term, and I do think it probably ends the year higher than even where we are now.
Lobo, you talked about coming into this year with copper as your main call, also bullish from a macro perspective on gold and silver and a few other areas. And you've also discussed just now that the market currently is not looking at fundamentals. It's not looking at macro trends necessarily. It's just all the flows of the machine whipping everything around. So have your views on those three metals changed at all because of what's happening?
Not really. It's just the short-term volatility. Part of my thesis, and I've heard from people who are confused, like, oh, but you said copper was your top pick. But yeah, I've also been saying all along, yes, it is, but I'm not ready to buy yet. I want to see the inflation picking up. A big part of my thesis for copper and or any other industrial minerals or commodities that have supply constraints, which is a short list, the argument is based on inflation and perhaps even the reflationary boom post-disruption, when the powers that be come charging into the rescue. We may be close to that. Trump may have upset the apple cart enough that we're close to that. I haven't looked this morning, but the odds of a May rate cut from the Fed were, almost nothing a couple of weeks ago. 2 weeks ago, it was like 20%. Last week, it was well north of 30%, right? So I haven't looked this morning, but there's potential here for this to play out more or less as I expected. And this is very bullish, I think, going forward. At the end of the day, the money printer always wins. If there's a deflationary force, if David Rosenberg is right or something for a time, I think the powers that be respond with more easy money. I mean, heck, the budget proposal in the United States, the supposedly conservative, Republicans are in the process of passing. There's huge spending in there, and they're calling for cuts, but the cuts are not defined. The spending is defined. The cuts are not. It's more like an aspirational goal.
Right. And I believe one of those proposals is to raise the debt ceiling by $3 trillion.
What's a few trillion between friends?
Yeah, exactly. Let's get back to silver. I'm just looking at it here around 30.70 on the near-term contract. Would you say that lately during this turbulent time, and it will often do this during volatile times, it acts more like an industrial metal than it does as a monetary metal?
We are in uncharted waters, and I think it is very dangerous to pull out any past charts. One of our favorite things as silver bulls, and I am a silver bull, is to point out that silver typically lags gold at the beginning of a bull market and then more than catches up on a percentage gain basis by the end of that bull market. That was true every time, actually, since 1970. It was true every time except the last one. That didn't happen in 2020. So if there's a paradigm shift, if there's a one-way door that we've stepped through in the gold market with all these, deep pools of cash around the world, deciding to hedge with gold and or to diversify, their holdings if they're central bank reserves with gold, that does not apply to silver. So it is different. Now, people get mad at me, silver bulls, I'm called Darth Silver for a reason. They get mad at me for pointing out silver's increased industrial side. But I think this is just a fact, and you ignore it at your own peril. But it is not necessarily a negative fact. So during times of turmoil, as we are right now, what we're talking about now, it's not surprising to see silver underperformed. It's on days where people are concerned about industrial minerals, that is going to be a weight on silver that is not on gold. On the other hand, come the day that the reflationary boom is going and all the industrial minerals are getting a tailwind from, we renamed the Inflation Reduction Act to something, that Trump likes and, spend the same money on, on something that Trump approves of, that money goes into the marketplace. That money goes into the real commodities and raw materials needed to execute on that plan. In that case, there's nothing in that recipe for gold, but there is for silver. So my view has long been that under the right circumstances, when we get to that reflationary phase, silver is the win-win metal. It wins based on being a monetary metal and an inflation hedge, and it wins on being a critical industrial mineral that's part of the electrification. It's part of many electronics. It has medical uses as well, right? So it has that industrial demand that gold doesn't have. So, don't take me as a silver hater, but right now, it's really interesting how many days, just look at the charts over the last month, how many days have we seen silver and gold move in opposite directions? Some days when there's this, big movement, we see silver and gold move together, which is very reassuring for a bull like me. But on most days, we see them wiggling in the opposite direction. And that tells you, you can't let your love for an investment thesis blind you to the data that we do have to pay attention to, whether it's manipulated or not, by the way. To throw up your hands and say, oh, it's all manipulation, silver's the most manipulated metal in the world. Well, fine. If that's true, maybe you should just take your marbles and go home, because it's the most, you'll never make any money. But in the world that I operate in, manipulated or not, I have been able to make money on silver stocks, just like gold stocks. So I set the manipulation question aside. I try to look at the market trends and try to speculate accordingly.
Couple more questions for me for you, Lobo, before we get to Q&A. And I encourage our viewers to add some of their questions, if they have any, to the chat section on your screen there. Now, back to process. You've talked about liking to have a barbell strategy, i.e. buying some majors, buying some junior explorers at the other end. And you've said that you not a lot of room for mid-tiers, but so could you expand on that for us again?
Yeah, I don't make any friends saying this for the mid-tier space. The exception would be that if it's not really a mid-tier. If there's a largish junior single asset producer that looks like a takeover candidate, I do like takeover candidates. And so, maybe it wasn't surprising back in the day that Pretium got taken over. There are other examples where somebody builds a mine, it's making money. Maybe, we're out of the sexy fun part of growth and, building the brand new mine and all that, but it makes money. And so takeover makes sense. But generally speaking, I do follow this barbell strategy that you have, again, because nobody knows what's going to happen. I think I have a pretty good track record of picking takeovers, but you never know. And they often don't happen for years and years longer than you thought. Silvercrest is another takeover. But yeah, sometimes, what was Valentine Lake? Who had that in Newfoundland?
Not Marathon.
Yes, it was Marathon. That's right. I liked Marathon as a takeover target, but man, it just didn't go anywhere for years. So that's kind of a dangerous thing to bet on. And the idea of a barbell strategy is to try to mitigate danger. So yes, if I park some money, I'm bullish on whatever the underlying commodity is, and the blue chip, stocks in that space are expected to go up. That's, it's not, I'm not going to get a 10 bagger there, but I should do okay. That money should be relatively safe, and it gives me the comfort to go back on the junior end of the spectrum and look for some, discovery that's in process here, and shoot for the bleachers aim for the bleachers on that one.
You've also said, Lobo, that the company that is in pre-production really is the sweet spot for you. So what are some of the factors that make that the case?
Well, it's fairly simple. It's a first-time mine builder. Even if you're a junior producer, but you're building your second mine or something, it's not the same. The market treats you differently as a producer. And by the way, you have to deliver to the bottom line. If you're not delivering to the bottom line, even if it's for a good cause, like we're building our new mine or something, it's not universal, but the market tends to not want to reward that kind of behavior. So the pre-production sweet spot applies specifically to first-time mine builders. The idea is that you go from spending money, literally drilling holes in the ground, pouring money into the ground, right, to making money out of one big hole in the ground, the mine, when you're mining. And the market recognizes that value change. And so there's a free report on this on the website, if you don't mind my saying so, independentspeculator.com. Look for PPSS, the pre-production sweet spot report, in the free reports area. And the data, we've been working on this for years now, and I think I actually have most of the cases. This is not a representative sample. I think I have most of the cases of this type of play over the last 30 plus years. And the average gain is on the order of a double, okay? Maybe not a 10-bagger, but most of them actually succeed. So to have a high probability of, a gain that's better than money in the bank in terms of percentage gain, I think that's extremely attractive. So this is my favorite speculative strategy. The problem with it is that there's only a couple of them per year. And it is possible to screw it up or to build a mine in a very high risk jurisdiction where there could be a coup or, things can go wrong. So due diligence still matters, right? Stock selection still matters. But if you're, honestly, to be fair, you could do this at home. It doesn't take a lot of due diligence to avoid the ones with the clear screaming red flags and pick on the better ones. And the odds are good that you will make, substantial gains on that. And by the way, this isn't a forever thesis. Like, who knows when a takeover will happen? We were just talking about the average of a mine build for a junior is around 2 years. Some of the smaller ones, it's less than a year, some a little longer, but this isn't a forever thesis. And they're either succeeding or not. And you can see that as the reports come in.
Okay, let's get to some questions here. We have one from Surya on Caliber Mining. I'm just looking at the chart here. It's been very successful. The last 5 years, the stock up nearly 270%, and the last year up nearly 60%. So is that one that you own and have recommended?
Well, anybody who's ever seen me do an interview before knows that I don't talk stock picks and I don't give away the research that my clients pay me for. So I'll decline to give an opinion there. I will say, I guess I will give recognition to the question. Like, that is a good question. It's a fair question. And the person has identified actual value. Like, when this story first came up, and yes, I have followed it. And in fact, I've been on the ground with them in Nicaragua from predecessor times. So, there were interesting assets all along. Nicaragua didn't make me very comfortable. They've diversified that. It's a very different story now. And I'm sorry, please don't be mad, but it is a company we cover in my take, and that's where people can find the full answer to that question.
Okay, that's fair.
Is it? I don't know. Other people give out free stock picks. I'm just glad people can't throw tomatoes at me through the computer screen. But it's the way it is. I do want to hear from the audience, though. Any concerns about other things, besides stock picks? I'm happy to dive into.
Yeah, we're a little light on the questions right now. We have a certain amount of viewers right now. We'll get more when we replay this. We're also going to we'll have it up on YouTube in no time. In fact, it'll probably stay there, and then people can watch it after the fact if they don't have the time right now. I guess we'll just wrap it up with any final thoughts from you, any sage words of wisdom, any advice. What are your thoughts here?
My long white beard here. Yeah, okay. Yeah. I mean, I do have something that I want to say. We've touched on this already. I think that times like this, besides volatility being your friend and all that stuff, okay, great. There's an opportunity here for people to use this market volatility to actually learn something about themselves. What kind of investor am I? And if you're freaking out over what's going on, or if you're angry, like I really think it pays. This may sound like pop psychology mush or something like that, but I actually think this is very important. Know thyself is extremely important for investors, because if you don't, and if you just, if nobody knew but you, and you would be honest and admit, I'm a fairly emotional investor, that says that maybe you should get into the most volatile junior end of the spectrum here. And maybe it might be better for you to stick with the majors, that kind of decision. You're getting valuable feedback. One of the guys on my team just wrote about this on the shakedown in the uranium space, calling it a litmus test for investors. That's a free article on the website again. I really think this is important. And when I do workshops at conferences or PDAC or things like that, one of the first things I almost always start with is this know thyself thing. Rick Rule likes to say that the average investor or speculator's greatest enemy is to the right of their left ear and to the left of their right ear. And what I'm saying right now is the volatility we're experiencing right now gives us an opportunity to introspect, if we're honest, learn something about ourselves and adjust our investment strategies accordingly. And I sincerely believe that anybody that can do this honestly will have better investment outcomes going forward.
Agreed. That's very good advice, especially for a younger person who may be going through this type of turmoil for the first time and learning a lot of lessons. Let's squeeze in one question here from Adrian Cantwell before we wrap it up. He's asking about jurisdictions and which are becoming more favorable for investors and which are less favorable. I know that you really don't like political risk, whereas a guy like Rick Rule is actually okay with that.
Well, or to quote my other mentor, Doug Casey, at some point, price trumps risk. So sure, I'll even go to Ebola Central if I can get pennies on the dollar. Or, sorry, that's the way it is, right? Or, but I'll go to, let's say, not a crazy place, but, let's say Cote d'Ivoire or Ghana in West Africa. They're not Ebola Central. They're not AK-47 Central, to use another insensitive term. But they're near. And, Ebola doesn't care where the border is. And a revolution gone wrong could spill across a border just as easily. But if I can get into a story in places like that, I don't just write Africa off entirely, right? Oh, Africa risk. Africa is not a country. Africa is a continent, and the countries are different. But to answer the question, I think this has come as no surprise, but clearly things are going in the right direction in the US. It's amusing to me that when candidate Trump was talking about drill, baby, drill, I was out there on X and other places saying, it's not very far from drill, baby, drill to dig, baby, dig. And now with oil down, below 60, or I'm not sure where it is at the moment, but, drill, baby, drill is kind of off the docket. But dig, baby, dig is there. That executive order, giving the ministries, we don't call it ministries in the US, the various departments, 10 days to come up with a list of critical projects to move forward and give them 10 days to approve these things. Like, that's Operation Warp Speed on steroids. And I am hearing from sources in the field, like the actual companies, trying to get a permit to drill or a plan of operations, lovingly known as a POO out there in the West. These things are happening. So, for people who have discounted the first world as being too expensive, well, we're seeing, a reason for optimism. North of the border up there, my dear friends in the Great White North, I think it's really interesting that, you've got the conservative candidate who's basically I shouldn't say, but his words are echoing Trump, and he sounds like dig, baby, dig big time to me. And now even Carney, like, okay, maybe we don't believe him. Okay, he's just pretending until he gets elected, and then he'll come out and do all these crazy things and reinstate carbon taxes, whatever. Okay, but even he has to talk about it. Like, even he is talking about fast tracking energy projects and making Canada a global energy powerhouse. It means something in the marketplace when politicians are forced to at least act like they're resource friendly. And in this world globally, where resource nationalism, it's not just the trade war. This was going on before the trade war, but the trade war is exacerbating it. Where, China, one of their responses isn't just the tariffs. It's okay, no more neodymium, no more magnets, even forget the raw product, right? So I'm losing the focus of my answer here. And I guess my answer isn't a list of, oh, this and this and this are the best destinations or the safest jurisdictions. I'm saying the world is in a process of changing right now. And so whatever your list is, you need to revise it. If there were countries that were off your list and now they're looking better, Argentina would be an example. Like, there's one where the government is seriously interested in support, and they're walking the talk. They're not just talking it. They're implementing, regulations, the RIGI, to support investments in Argentina. And I think other countries are going to be even Europe. I mean, we'll see if they actually do it. Sorry, I shouldn't laugh, my dear European friends, but I think you understand why. But I remember a headline about 42 critical minerals projects that Europe was going to try to fast track on European soil. I suppose in European terms, that probably means 5 years instead of 20 to get a permit. We'll see. But this is the world we live in. So, if you've got a shit list, pardon my French, of, it was European, of countries you won't invest in, watch for changes. And if you got an A list of countries that you are investing in, watch for deleterious results. Watch for backlash or problems importing the goods they need. By the way, just by the way of not thinking what's going to happen, there's a lot of people I'm seeing on social media that are celebrating low oil prices and say, yeah, this is great for the miners. Well, there are a lot of miners on grid power, so it doesn't matter. But the very same chaos and turmoil that's whacking oil prices and making it cheaper to run gensets on your mine site, it's also taking steel prices way north. Your Caterpillar equipment's going way north. Your CapEx costs are going to blow out. So don't oversimplify this. We need to watch how these trends play out and speculate accordingly.
All right, very thorough answer there. A couple of more questions have come in. We'll take these last two and then we'll wrap it up. When you're out there kicking rocks, this is from William Bryant, and that's my little preamble to this question. Do you have a favorite type of gold-infused rock, epithermal, porphyry, or another type?
Yeah. Well, there's nothing like a vein, a quartz vein with visible gold in it, and not just some little speck, but like gobs of it. And I have seen this in the field. And the big ones, the ones that you make the most money on, honestly, are not these veins. It's the big disseminated bulk tonnage projects. The world-class projects tend to have invisible gold. And in fact, the little specks of VG that they love to put in the drill core there at PDAC at the core shack or on their website, pictures, oh, look, there's a magnifying glass. Here's this tiny little speck of gold here, right? That often is meaningless. Or even if it's there, if it's consistently there, the nugget effect is often a problem and not a benefit for your project. So it is gorgeous to go underground and see and just see the raw native gold right there in the earth's womb, as it were. I remember going to see Bruce Jack, and it wasn't just a little speck of gold, and it wasn't just a little veinlet of gold. It's a fucking seam of gold that's as wide as my body at one point, and the narrow part is as thick as my thigh of gold silver alloy electrum. That is truly spectacular to see something like that. But economically, it's really about drill results, average drill results. Don't be fooled by those high-grade headlines. I'm not going to mention names, but a very high-profile gold explorer just put out a multi-million ounce first pass gold resource, and the stock fell off a cliff because, the average, which was always published all along, all the results were there, but the average was nothing like that headline. So that sexy gold vein that you're asking about, I'd love to see it, but it's all about the accumulation of data and the drill results.
All right, you painted a nice picture there of a really juicy gold vein underground. Last one here from Morley Duerksen. What is your estimate of time, if you have one, of when you would rotate out of precious metal stocks into energy companies or other energy companies?
Right. So I'm right. Yeah, because uranium, I'm already ready to chomping at the bit to go there. So that wouldn't be a timing question. It will be, I will deploy. And by the way, I do subscribe to the idea that oil is like tobacco. Right back in the day, everyone became hated, starved of capital, but people still smoked. And for the companies that actually had the goods, the right stuff, there was money to be made there. I think that's where we're looking at with oil. And maybe this isn't quite so controversial now with drill baby drill and clean, beautiful coal. But, I think even with the most optimistic scenarios, if you subscribe to the green agenda, peak oil might be in 2060 or something. So I'm very bullish on oil longer term. And I actually think that in due course, we're probably going to see triple digit oil be normal in the future. But we've got to work through the glut now. we've got to have the there's a lot of things that have to happen first. So it's not about rotating out of precious metals and into oil. And by the way, I don't like the term precious metals. There's monetary metals and there's expensive metals. Precious is meaningless, and they're not the same thing. So, sorry, one more nuance. I don't expect to ever sell any of my gold bullion or silver. I mean, I hope my kids inherit every single ounce of it, right? I never spend it because it's savings, it's insurance. If I have to dip into that fund, then something bad has happened. Well, okay, maybe if a once in a lifetime investment opportunity comes in, I might sell some to do that. But generally speaking, I'm not in and out of the metals themselves. That's my long-term savings. The stocks, sure. If it's looking like gold has peaked and it's rolled over and we're probably in for a bear market, I don't want to be one of these people who in 2011 clung to that ship and rode down for the next 5 years. So yeah, I would definitely be taking profits, executing my upside maximizers, rotating into other things that look more prospective. And if that happens to be oil at the time, it just happens to be, I will buy into the oil space even if that hasn't happened, just because I see the right things happening in the oil space, or more immediately the copper and uranium spaces, or whatever comes up.
Lobo, we can't thank you enough. That was, as always, very informative and interesting and entertaining as well. Great stuff. We appreciate it.
I try. Hopefully useful.
Absolutely. Thank you, Lobo. We'll talk to you again. That's Lobo Tiggre. He is the CEO and the publisher of The Independent Speculator. Thank you for watching. Thank you for your questions. Just a reminder, we have a live copper showcase next week at 1 p.m. Eastern time. We've got 6 companies lined up. I'm just looking at the lineup here. Oracle Resources, North Isle Copper and Gold, Corex Copper, Ivanhoe Electric, 4N Mining, and Arizona Sonoran Copper. So a great lineup of CEOs and other executives from those companies. So please tune in for that. Thank you again for watching today, and we'll see you next time. Take care.